Good morning, traders. It's Wednesday, the 20th of April, 2016. It's 8:01 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight stance, crude oil taking a hit. Um, the Kuwaiti strike was called off, and the market is moving towards risk. We have the Euro stocks and the DAX leading the board. Euro stocks up 14 points, up almost 0.5%. And then it just trickles down from there with the Dow minis trading almost flat, up 7 points. Very, very close to 18,000. Hit 18,000 several times yesterday on the cash. The treasuries, the euro, gold, Japanese yen, all down. The overall sentiment uh, is towards risk allocation. The Nikkei was strong, but only slightly. Actually, the Nikkei was slightly up. The Shanghai was down 2.3%. The Hang Seng down 1%. And across Europe, the DAX is up. As I said, the FTSE, the Euro Stoxx is up, but the FTSE is down slightly. The CAC is almost flat. A mixed bag. The market's trading near yesterday's high, which is also the overnight high. We managed to take out that double top. We'll talk about that in a minute. As far as what's ahead, the only thing I see, the two key things ahead of us. U.S. existing home sales at 9 Central, 10 Eastern, expecting 5.3 million units. And then at 9:30 Central, 10:30 Eastern, crude oil inventories expecting 3 million barrels. The prior 6.634. Distillate inventories expecting negative 183,000. Prior is 505. And gasoline inventories negative 2 million. Prior is negative 4.237. As far as speakers, Draghi spoke this morning, 5 a.m. Central, 6 Eastern. We're looking for comments from BOE's McCafferty right now. Earnings after market, pre-market, we had SAP and several others in Europe, and in the U.S. we had Coca-Cola. Aftermarket today, we have American Express and Qualcomm, among others. The earnings season is kicking into high gear here, so that's likely to have an influence, especially after the market closes. Let's switch gears and look at the overall picture from yesterday's action. So here it is, the chart from yesterday. We'll start out by looking at what we expected versus what we got. Here's your primary hypothesis for yesterday as discussed. This is hypothesis number one. The expectation was for a move down early, an open auction out of range, just to start out the day right here, an open auction, and then a move down at some point. But ultimately, the rotation is likely to take us, was expected to take us up higher. Again, I drew these lines to show a continuation out of the balance breakout. And so the expectation is there would be strength on every dip, and a rotation up is very, very likely. The secondary hypothesis yesterday, which didn't play out at all, the secondary hypothesis was an attempt, another open auction out of range right there, and then an attempt higher, failure at new all-time highs. That's what we've been doing lately, pushing through by about 4 to 6 ticks and then rotating back down. This would have been the better trade here for day traders, but that's not what happened. It was unable to push higher enough early to take us all the way back down as sellers are found. Here's what ultimately happened. Here's what ultimately happened. It pushed to 97.75 on a double top. The open was an open auction out of range. We left a double top, and then we had a very strong drop here into the prior day's high. A tiny little bounce, and then it pushed through. And where did it go? It went right into the prior day's point of control and the high of the last monthly high, which was December's high at 86. So it chopped around in there. A lot to do in this area. Remember yesterday I said if we slip through this 2080 area, we're likely to see ourselves all the way down to 2075. We didn't do that. We bounced right off the point of control, straight back up to the November high, chop around for a little bit, and we finished in the middle. The point of control is on top of November's high at 2093. Which is basically where we open. One thing to note, if you have the S5 bookmap, a lot of liquidity at the open yesterday, just a ton of trading that happened there. So we watched this this little white line here is the developing point of control. We watched that point of control go from there to there, you know, up top, and then it moves back down. It comes across right here, and then it moves right back down to where it was on the open. There was a ton going off at 2093. It seemed like a line of liquidity that kept getting attacked. Very interesting to watch, but not much to do with it as far as trading off of it. But still, what we did yesterday was we had a range extension down, normal variation day, and the market closed in the middle. This shape here portends a higher, a continuation higher. The overnight session pushed back down to that monthly high, down to 2085.75 before it turned around and is now trading against 2096 quarters. So overall, things do not look so good for the shorts. Apparently, the website's down again. We'll have to look into that in a minute. But in any case, as we look at the overnight session, here we go. The overnight session, a clear double distribution with the LVN right at 2093. 2093 is going to be key, the key over underline this morning. This is the area that we need to watch on the open. So overall, with that in mind, the point of control is near highs. We have another key point of control down, or high volume node down at 2088. But with that in mind, the expectation this morning is to open an open auction in range. The expectation is it's likely to swing down into this area again, trade this area, and then start to push higher. I am expecting new all-time highs this week, simply based on the structure below us. So that's the primary hypothesis. The secondary hypothesis is to chop around, attempt higher early, continue to chop, and then find its sellers, and then base for a while before it continues higher, giving us intermediate OTF type swings back and forth this morning. So that's the secondary hypothesis. The tertiary hypothesis is for it to drop and just trade inside of the prior day's range most of the afternoon, and then run up and break higher. All three hypotheses are looking for higher. There's a much higher probability of it continuing higher, to continue this trend here rather than pushing lower. I'm always open to it dropping, but it would have to get down beneath 2093 and start failing into this thin zone and start getting down below the 86 area for us to see further lows. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.